Good evening, students. Welcome to the next virtual coaching classes organized by Board of Studies, ICAI. Today's evening, we are going to have a discussion on this topic called Assessment, Audit, Inspection, Search and Seizure under GST law. Yesterday's session, we had a great learning from the topic called Refund under GST law. So we will start with a couple of pending aspects which are there under refund under GST law. We will finish that particular chapter and then we'll come back to today's discussion called Audit, Assessment, Search and Seizure. So students, as a protocol, I would like to have a confirmation from some of you who are listening to me. If you can confirm over the chat window whether my session is visible, I'm audible, and the contents are clear enough. Once I get a go-ahead clearance from some of you, it will be great for me to go ahead with the discussion. Before we start with our today's pending topics in this topic called refund, I have a couple of questions which are left out in the yesterday's session. I'll take up those questions and come back to today's discussion. In the previous session, we had discussed on this refund mechanism, where I have shared this thought process, how the computation of refund will be done in relation to zero rated supply, in relation to inverted duty structure. Technically, there is one question from Namita, what she's asking. Sir, you have given this example called zero rated supply. You have explained as a formula where there is a numerator, there is a denominator multiplied by the input tax for the relevant period. So far, so good. Now, you have said that there is an eligibility of 3,34,000 as an input tax credit. The question from Namita is, why is the department has to verify point number B, verify point number C? Rather, why don't they give a refund of this 3,34,000 upfront to the assessee? This is a technical doubt which was asked by Namita. It is a genuine point, but look at from the revenue point of view, Namita. See, there is a formula, there is a mathematical equation which has indicated that how much is the credit you should get for. I agree with you. There's a mathematical equation which indicates how much is the refund you should get for. Unfortunately, this balance is not there in your credit ledger after you filed your return. I repeat this discussion. In the given problem, my output tax, the tax which is collected from my customers is 9,78,000. My tax paid on the inward supply is 12,89,000. So when I compare these two, that is the tax which I have paid on my purchases, this portion I compare with the output tax, the tax which I have collected. So when I compare these two elements, Namita, I have only a balance of 3,11,000. Now, please remember, mathematics has got a tendency to take away or to disturb the equation. Now here, in the given scenario, if you happen to see my total supplies is 91,80,000, my percentage of zero rated supply is on my taxable turnover. I have to take on taxable turnover. Now, if you happen to see here, Namita, 32% of my turnover, is on account of zero rated supply. That is how my mathematics is saying that 32% is what you have to get as a refund. But unfortunately, the reality is as on say July 2021, I have filed my return for June 2021. Once I file my return, I have been left with a closing balance of 3,11,000. Now, technically, you happen to sit on the revenue side. You happen to sit on the department end. Look at these two figures. Assessee comes with an application saying that, sir, I am entitled for 3,34,000. But when you want to give that money as a refund, he has closing balance in electronic credit ledger only 3,11,000. My objective is good. My objective as a government is I have to give back the accumulation of ITC. But accumulation should be there as a balance in your credit ledger. Unfortunately, it is not so. Now, this is a step by I compare my calculation with the closing balance. The department went one step ahead. There are little smart people who are educated and sound people from the government side. They have gone one step beyond what they say. Namita, you are entitled for refund. I do agree with you. Let me do this way. You give your mathematical equation. You give your credit ledger balance after you file the return for that period. You give me your credit ledger balance as on the day when you're filing your refund application. I call this the third element as C. A, B, C. A, mathematical equation. B, the balance in the credit ledger. C, on the day you come for refund with your application, on the day you come for refund, what is the balance in your credit ledger? Gradually, you have been in a position to exhaust. I repeat, gradually you're in a position to exhaust your input tax credit. So when you're exhausting your input tax credit, they say, look, 3,34,000 has come down to 3,11,000. Gradually, you have exhausted your ITC and you're left with only 2,85,000. So I'll give you a refund, the least of these three. Now, if you were really having a accumulation, this accumulation should be shown in your balance sheet as current asset. Because it is not available, it is not fair on my part as a government to give you a refund of more than what you are having as a hit in your balance sheet. So the money which is stuck in your balance sheet, only that I have to give. So this is the rationale behind why A, B, C are compared in terms of giving the refund. So this is the first answer to your question, Namita. Moving on, there is one more question from Mr. Gopinath. He asked this question. Sir, I have export of goods, I have export of services. I have zero rated supply of goods, I have zero rated supply of services. So when I have export of goods without payment of IGST, export of services without payment of IGST, do I need to file a separate application or can I combine these transactions and file one application? Answer to that particular question, Gopi Balan, this application can be filed one application. I can club these two transactions and file a refund application. So this is the answer to your next question, Bala, which you have asked yesterday's session. Now, let me come back to my today's session on the pending topic of my refund under GST law. Now, interest on delayed refund. Everyone knows that there is a compliance when it comes to the matters of payment of tax. Your income tax, if you don't file your income tax return, if you don't file within the due date, there is an applicability of 234A, B, C. What is the department doing? The government is saying that, Praveen, there is a shortfall in advance tax. There is a tax to be paid in a timely manner, you haven't paid. So please compensate that. Now, the way the government is asking from me the interest or penalty. Now, penalty if I have violated anything. Interest because of the revenue which is lost to the government. The same way, I, as an assessee, I have my rights when the government fails to keep up their promise. What is their promise? When I go to section 54, there's a clear mandamus, there's a clear direction that any application we file with the GST department, within a period of 60 days, my application should be processed. I repeat, application which is filed under section 54 should have been processed within a period of 60 days. If the government is failing to do so, the whatever order was passed for refund, the assessee is entitled to get a refund. So this section 56, which deals with your interest on delayed refund, says that if the assessee is getting a refund belatedly, that is beyond the 60 days stipulated point in time, he has to get a refund of 6% on the order which was passed under Section 54. What is the rate of tax? 6%. Now, when we delay, when we short pay the tax to the government, we have to pay 18%, 1/8. The other day, payment of taxes on 18th of this month, we had a discussion on Section 50, where I have said that whenever there is a shortfall in payment of tax, 18% is the return interest I have to pay to government. Now, unfortunately, when government does a delay, I don't get 18%, I get only 6%. Now, this 6% has been originated from one of the allied laws where there's a compensation. Whenever there is a compensation to be paid by the government to the party who has suffered because of there is an injury, technical term called injury. Whenever there is an injury caused to a person because of an act which was delayed by any of the government public servant, then the injury should be compensated with the interest of 6%. So this 6% is a particular rate which has been fixed in one of the allied laws, compensation of losses. That particular 6% is copied across to all the tax laws. Even in income tax, you get the 6%. So this provision says that I, as an assessee, I have filed an application. My application, I have filled everything. I have filed application. My officer has verified everything. He has given an acknowledgement. In the acknowledgement, there was no deficiency. Means whatever documents I have to give, I have given. So since the officer delayed, I have to get a write of 6% with interest. From where? From the day I have filed my application, from there 60 days will be calculated. If my application is not processed in 60 days, from the 61st day, I'll get an interest of 6%. Now, the provision further goes on to say, what if, by way of adjudication, by way of appeal, by way of a tribunal, by way of a court, any of these forum, I happen to be a party for an appeal. Like an example, my goods have been withheld because of non-carrying of an e-way bill. The officer concerned has recovered a tax of say 1 lakh, penalty of 1 lakh. I have gone for an appeal. My adjudicating authority, my appellate authority have passed a refund order saying that the concerned proper officer has recovered 2 lakhs from Praveen, which is not in line with the law. So I have an order on my hand. Once I receive an order, straight away refund does not come. Again, I have to file an application to the proper officer saying that, my dear officer, look, you have recovered 2 lakhs. I got a favorable stay. I got an order from a officer above your rank saying that this money what you have collected is erroneous. In those matters, when I file an application, again, 60 days, my application has to be processed. If there is a delay beyond 60 days, I would be entitled interest at the rate of 9% per annum. So in regular course of time, 6%. In this particular case, 9%. This is the interest which I get on my delayed processing of refund. Examination, there will be a theory question for 2 marks on this particular interest. They'll give you a scenario. Assessee who has paid a particular tax, he has erroneously paid a tax. He noticed that under Section 77, he has to remit a proper tax and claim a refund. Applicant has filed an application, and after a period of 90 days, there was no refund processed by the officer. Examine the right to get the interest on that refund. So in general, 6% is the rate of interest. In case if a refund is due on account of an appeal or tribunal decision or a court, then in these cases, instead of 6%, 9%, enhanced benefit will be given to me. Now, in addition to this, there is one more provision which we have to discuss. Just give me a minute. Let me come to the respective slide. Yes. This is the last slide which I have left in the yesterday's session. There's a small correction, students. This rule 96A should be read as rule 96 only, not 96A. Rule 96, which has a restriction for claiming refund for IGST paid on goods or services. I'll give you a backdrop of this particular provision and I'll explain you this provision. See, it is always good to apply these provisions to the business on hand. But at the same time, we should know the relevant terms and conditions when I have to file, when I cannot file. Now, department has got a well thought process. They have seen various business models, like the example, like Namita has a question. So A, B, C. Why you have put the conditions A, B, C? Why should I go with the mathematical equation of A? Rule 89 sub rule 4, I get an amount. Why shouldn't I go with that amount? Now, similar to this rule, A, B, C, rule 96 talks about a business scenario where they say, look, you are a business person who is purchasing goods or who is purchasing services. You use the goods or services in your business and you do an export. When you do an export, you should not claim a refund under rule 96. I'll just give you the backdrop. I would say this is a tax planning which is done at a macro level. Say, let us take example of XYZ Private Limited. All these provisions, students, over a period of time, when you apply, when you examine various practical cases, you'll get to know why law was made so complicated. Now, law, every day you will see amendments. Why? Business is not static. Business is dynamic. Every day, new thought process come, new decisions come. To match to the requirements of the decisions of the business, the law gets amended every day. Now, this is one of the classic example. Let's take this example. XYZ Private Limited, registered person in Tamil Nadu. Division A, I would say 100% export. Division B, 100% domestic. Division C, service unit. Division D, 100% EOU. Now, if you look into these individual divisions, position of ITC. Division A, which is 100% export, there is an accumulation which is possible. What happens here? Now, I'm giving an example. There's one company called XYZ Private Limited. This particular company has got 4 divisions. Means you can say 4 different verticals. Now, why do I have this business verticals? Because of my business requirement, because of my opportunities I see, I have a different divisions. Physically, it could be dislocated. These particular divisions could have been scattered physically. Operational wise, they have had different heads. Now, different division B, which is 100% domestic unit, has little or less accumulation. There's no chance. Like as a domestic unit, I buy goods, I buy services, I sell goods, I sell services. The tax which I've paid on my purchases, this I set off with the tax on my output. So far, so good. Division C, this also I'll say less accumulation. Whatever taxes I have paid, this may be exhausted, may not be exhausted. Division D, I could have a mix and match. for accumulation. Now, this particular given business model, if I go for refund, I have two choices. Under refund, choice number one, export with payment of IGST. Second, export without payment of IGST. Now, I will not give a problem, but I'll explain the backdrop. Mathematics, as I was telling the example which I have given to Namita, mathematics of 0.1 is much higher than mathematical benefit under point number 2. What happens here? I could have purchased in division D with payment of GST. All goods which I have purchased, I could have paid GST. Supplier would have claimed ITC, or I would have claimed the refund. Supplier would have claimed the refund, I would have claimed the refund. Now, in these two cases, assuming that there is a loss making. When I say loss making, I buy it 100 rupees, I sell it 85 rupees. Now, why do I do that? A business strategy. I could have an export business where I have a very good profits. When you analyze business, various companies, you come into this particular business model where one of the business vertical is making a loss, continuous losses. And when you look at the entity level, there is no restriction of ITC. The input tax credit which was taken in division B could have utilized for output tax of division C. The input tax taken in division D could have been used for division B. Similarly, ITC taken in division A could have been used in various divisions. So for controlling this particular business practice where there is a continuous losses, this company, if you see the audited profit and loss account, you see year on year accumulated losses is getting added. Going concern, there may be a effect. But that particular company, you happen to be a CEO or CFO, you come with this particular proposal. Let us do this way. Let us incorporate a entity which is an export-oriented unit. The moment I incorporate the export-oriented unit, what happens? I can export with payment of IGST. Whatever tax is getting accumulated in any other local units, that I could have paid and claimed the refund. Now, this is a mathematical thing where this route is like a kalpavruksha. This particular route is like a kalpavruksha, where assessee gets whatever tax you pay. I charge 18%, I charge 28%, I charge 12%. Whatever money which is sitting in my balance sheet as a current asset gets encashed. Another example, mergers and takeover. I can take over a sick unit. There is an accumulation of ITC which is there in sick unit. That particular company which I have taken over, I have a benefit of export with payment of IGST. I could have explored that particular route. Now, not to give this particular benefit, where there is a loophole in the law, there was a well thought process. Government has seen 2017, 2018, many business made a profits. Government noticed that something is going on wrong somewhere. Every assessee is filing a refund application. Then they made an amendment where this restriction has come into picture. So this restriction says that, look, if you are a registered person, you procure the goods, you purchase the goods, where your supplier has enjoyed the benefit of deemed exports. What is the deemed exports? Advanced license authorization, 100% EOU, EPCG. So if your supplier has enjoyed any of these benefits, or your supplier has enjoyed the benefit of merchandise export route, your vendor, your supplier is charging 0.1%, you export with 18%. Now what is happening here? I buy at 0.1%, I raise the invoice at 18%. The moment I raise 18%, the question comes to the mind of a taxman. Praveen, you purchased at 0.1%, you are debiting your electronic credit ledger for 18%. From where did that 17.99% has come? Sorry, 17.9% has come. This question made the officer to think by and large, and they have amended they brought in this particular rule 96, where they say, if you are a businessman, look at your purchases. If your purchases has got purchases on account of deemed export, purchases on account of merchandise export, you are barred from exporting goods and services with payment of tax. You are barred from payment of tax on goods and services exported. So what I have to do? I have to go for rule 96 or rule 4, numerator by denominator into ITC. I get some percentage. On the basis of that, I have to get a refund. Now, this is one restriction under my rule 96. This is one restriction under my rule 96. One of the exception they said is, in case if you are having an APCG license, I'll give you an exemption. APCG, they have a different thought process. When I talk about a net ITC in the formula, what we have discussed yesterday, input services. My input tax, which I have to claim, does not include capital goods. So this capital goods is something which they have kept away from claiming a benefit. This is the first restriction. Second restriction. If you are an entity registered as an EOU or ST, what you call software, FTZ, fully traded zone, or STPA, Software Technology Park of India. I repeat, you're a EOU, STPA, or FTZ. Any of these entities, you import the capital goods, you import inputs, without payment of duties and taxes. You cannot get into this route. I'll give an example. Say a software company, which is a 100% export-oriented unit, can purchase the electronic gadgets without payment of customs duty. That is one entity which has been restricted from filing an application under this particular route. So, students, these are the two topics which have been left out yesterday, which is in relation to refund under GST law. From here, let's come back to today's discussion on the topic called assessment, audit, inspection, search and seizure. Assessment, audit, inspection, search and seizure. This particular topic, little theoretical in nature. I'll try to make as interactive as possible for us to understand why should we need to study this particular topic. Before I start with this particular topic, there are a couple of questions in relation to today's discussion which have come. I will just clarify those questions and then let's come to today's topic on hand. First question, which is again from Namita. Her question is, so with respect to distinct person, sir, only distinct person is outside the scope of export of services definition. So if supply is made to related person outside India, will it be considered as export? Any export made to a related person will not be considered as export, Namita. I repeat, any services exported to the distinct person shall not be considered as export. Rather, there is an exemption given for that. So answer to that question, no. In section 3.8a, value of whole warehouse goods sold more than once is determined. How goods once sold can be sold again? I didn't get this question, Namita. Section 3 of which act you're asking, just clarify. I'll give a briefing on that now. Next question, in section 5, imported goods IGST is levy, tax not duty. This is a question in relation to customs, Namita. Wait for the customs topic because we will discuss at length. What is a customs duty? What is a tax? What are the taxes levied in lieu of customs duty? In detail, there is a chapter on customs duty provisions, Namita. Just wait for that particular thing to wait. Further, if A does a high C sales to B after adding 20% margin, but title is transferred to endorsement of documents in bill of entry value shown. Okay. This was a question in relation to high C sales. In relation to high C sales, say Naveen has imported goods worth rupees 1 lakh US. Naveen has transferred this goods worth 1 lakh on a high C sale to say Ramakrishnan. Naveen has imported for 1 lakh. Naveen has an invoice from his vendor for 1 lakh. In turn, Naveen raised a bill for Ramakrishnan for $120 USD. Now, when Naveen goes, or Ramakrishnan goes to the customs authorities to file bill of entry, the customs authorities will ask a question. Look, the import consignment is in the name of Naveen. Naveen has endorsed the title, the right to the goods to Ramakrishnan. Ramakrishnan will show the contract, along with the contract, the original invoice of Naveen, and based on this Ramakrishnan's contract, 1,20,000 was the last price which was agreed to pay to Naveen. That will be considered for the purpose of levy of customs duty, Namita, in case of a high sea sale transaction. Then Akshay has one more question. What if the goods which I'm exporting are exempt and the input, if I'm using for production, is taxable? Then also we do in a calculation that formula for refund of ITC or ITC and exempt is not allowed. Akshay, goods and services on which there is an exemption applicability. If those goods and services exported out of India, I can claim an input tax credit. Now, when I claim an input tax credit, I have an accumulation. My recommendation is, because your goods exported is exempted, go under Rule 89, Sub Rule 4, where numerator, turnover of zero rated supply, denominator, adjusted turnover, multiplied by ITC. Whatever amount you get, that is the amount you can claim as a refund. So this is the answer to your question, Akshay. Right? Next. Now let's come back to our today's discussion. Today's discussion, as I say, it's of full theory, but I'll make it more interesting for you to understand. Now, before we get into this topic, all of us watch the movies. When we watch a movie, there are a couple of movies where we get thrilled. We enjoy watching that movie. Now, if you look behind the scene, what happens? What is the expectation? What is the hard work done to see the final outcome? That is what makes us to thrill looking on the other side of the bench. All along, we have traveled in our career, traveled in profession as a taxpayer. You as an article assistant, you as a consultant have been advising the client to register under GST, to do the books of accounts, to prepare the tax payable, to assist in filing of returns. Finally, when a notice comes from the department, you all along with your support of a principal supported how to draft a particular showcase notice. Now, all along we have seen on this side of the coin. We haven't seen on the other side of the coin. Through this chapter and tomorrow's discussion, today's discussion, tomorrow's discussion, I'll make you to travel on the other side of the disc. We will see from the other side of the view how the department looks the assessing, how the government officers have been vested with the rights, they have been vested with the duties for the purpose of complying with your roles or the duty to be performed. So this particular topic, assessment, audit, inspection. This is precisely from the department point of view, what is required for us to understand from an audit point of view. What is the expectation of the government officer? So today I'll take you through a couple of examples. I'll make you understand what is an assessment. I'll also take you through a couple of aspects where inspection comes into picture. Whenever inspection happens, what are the powers vested with the officer concerned, and what is the procedure in case of a search and seizure? Most of the cases would have read in a newspaper, or we would have watched a couple of news where there was a raid on so-and-so particular businessman, so much of money which was unearthed. What happens in case of a search and seizure? Finally, arrest-related provision. Now, this is the overall coverage for today's discussion. Now, as usual, let me come to my Excel file to make you the platform set for understanding these particular provisions. Now, I will start with the basic aspect called assessment. Now, assessment is a general term. Assessment is a general term. It is not required for us to define. In general, I know assessment means a process where I determine what is a what is a supply. I determine on that supply what is the tax. I determine when I have to pay the tax. I also determine how much is the tax eligible. I file my return. So this entire aspect I can call as a assessment. What if? What if I fail in terms of doing the assessment? That means I don't know how to assess the output tax. The business model is so decisive where I cannot define, I cannot say, is it a supply of goods, is it a supply of services? That point in time, we will think of provisional assessment, where we take a help of the department officer for helping us to understand how do I pay taxes. Now, having understood assessment, having understood provisional assessment, what if the returns are filed when as a person, registered person, I do assessment, I file my returns. So the data which is furnished to the department, there is a scrutiny which is required. Don't expect that government offices are sitting idle. The moment I file my returns, it just goes and sits in the government portal or GST portal and nothing happens. At the back end, there's a GST officer who reviews what you have been doing. You have taken a registration. You have commenced your business operations. Have you filed your returns? Have you paid your taxes? Was there any mismatch in the data you have furnished? All this is done at the back end called scrutiny. Now, in the process of scrutiny, the officer tries to find out people called non-filer of GST returns. The officer concerned in the given particular gambit, he will see these are the jurisdiction, within the jurisdiction, these many people have filed the returns. This set of people have not been filing. So what he will do, he will just do a scrutiny and he will say that these are the people who have to file the returns, have not filed the returns. In the process of their regular audit, they will do the assessment and find out who are the people who have been not registered under GST. In the regular process, they do their inspection, they do the physical verification of premises, and they try to find out that particular businessman who have to register under GST but not register under GST. Finally, in the process of doing so, there is something called summary assessment. That is where the interest of revenue is at stake. The revenue, that is a tax department, is going to lose its revenue because of a particular assessee who has to pay tax but not pay. There is a serious issue which is going to come if I don't catch hold of that assessee. Now, these are the basic aspects which are connected with my today's discussion where Section 59 talks about assessment, Section 60 talks about provisional assessment, Section 61 talks about scrutiny of returns, Section 62 talks about assessment of non-filer of returns, Section 63 talks about the assessment to be done in case of a non-registered person. Finally, Section 64, summary of assessment. This is how my provisions of assessment till summary assessment which are connected. Nutshell, these 5 provisions, 59, 60, 61, 62, 63, 64, I think 64, this is 64. Summary assessment, 64, not 65. These 6 provisions are connected. These 6 provisions are connected with respect to your assessment. If I just ignore this, the rest 5 are the aspects where the departmental officer is expected to work upon. So this is first chapter which we are going to discuss today under the topic called assessment and audit. And prior to audit, assessment, how the assessment is going to happen under GST law. Let me come back to my presentation. Now, assessment. Whenever I talk about the term assessment under GST law, my assessment includes self-assessment. It is a process where there is a determination of tax liability. This process can be done under self-assessment, reassessment, where my returns are reviewed by the officer concerned, provisional assessment. I don't know how to pay tax. I take the shelter of a government officer. Finally, summary assessment, where there is a threat of non-payment of tax, which is done by way of a summary assessment. Finally, best judgment assessment, like a registered person who has to file returns but not been filing returns. This is where all these assessment provisions come into picture. In the process of this discussion, if you happen to see a life of the GST officer, always we make a comment. It is very tough for the registered person for doing a complaints under GST law. We always see, looking at the other end, we feel this particular MBBS course is much easier compared to doing CA. Doing an engineering is much easier compared to doing CA. Now we look only at our end. We don't look at the other end. Now, when you look at from the department point of view, I'll just give a practicality how the life happens at the other end. Now, always we look at the government offices, we just pass a comment that they work only for money, they don't have anything else to do. But in fact, there are some honest people, some good people who have been working day and night. The department circulars, the department notifications, day in, day out, there are amendments which are being done in the law. These are all done by the so highly profiled and highly talented officers who sit in a division called TRU, Tax Research Unit, Anti-Evasion, Vigilance, and Audit. These three have got some people who are very sharp in terms of their academics and concepts. These are the people who read the provisions on a regular basis, who look at the business on a daily basis. Based on the requirements of the business, they do bring in some amendments. Why so many notifications are coming? The law is getting evolved every now and then. With effect from 1st January 2022, there are multiple changes which are brought into GST law, which are not there for your examination. But why was that brought in? Looking at the requirements of the business. One of the example to tell you, all of you would have ordered food on Swiggy or Zomato. When you order food on Swiggy or Zomato, you would have seen the application. This is a fact. What I'm talking to you is a fact. When you order food on Swiggy or Zomato, you would see near your residence, close 25 plus hotels. I repeat, 25 plus hotels where on a daily basis, their counter sales would be not less than 10,000. Not less than 10,000. 10,000 per day, assuming 20 working days, 10,000 into 20, I get, 2 lakhs. On an average per annum, 24 lakhs. This is just on a rough estimate. 24 lakhs is the turnover. Now, what is the registration threshold under GST law? 20 lakhs. Out of these 25 hotels, students, if you happen to visit them physically, out of the 25 hotels, hardly 5 hotels would have been registered under GST. What is the story of the rest of 20? They would have not been registered. And it so happens, students, like owner, the moment you touch upon, you are touching 20 lakhs. The ownership transfers from A to B, from B to C, from C to D. And there is a change in ownership to take a benefit of my threshold limit under GST law. In reality, what is happening? A is the person who has been doing business all along. Now, these are the provisions which made the taxman to think through, and what they have done, they invoke the provisions of section 9, subsection 5. Students, why I'm talking all this? For you to understand the importance of this assessment audit provisions, I'm just giving this example, how the department people are doing their research with respect to augmentation of taxes. Now, what they have done, they invoke the provisions of section 9, subsection 5, and they say, there is an aggregator, a food aggregator. For example, let me name the aggregator as Swiggy. All these 25 food outlets who have been supplying food through this aggregator called Swiggy, I put the responsibility, I put the burden on the aggregator. So what the aggregator should do, he collects 5% tax instead of the hotel person, and that 5% tax is remitted to government. Earlier, what is happening, students? Out of 25 hotels, 5 hotels have been paying taxes. What happened to the rest 20? Happily, they have been enjoying not to pay taxes. Now here, in this particular mechanism, what happened? Government has done nothing. They just changed the position of levy from the supplier to the aggregator. Now, is there a power? Was there a authority under GST law? There has been an authority. 2017, when the GST came into picture, have we ever thought Swiggy and Zomato would have been so big? Have you ever thought Swiggy would have come for a public IPO, public issue, where 1.5 times oversubscription happens? The share price from a negative, the company which is having a loss, book loss, has been 1.5 times oversubscribed. Now there is a business which is getting evolved. A well thought provision in the process of this audit and assessment was connected, where they just did a minor modification under 9.5, where the collection of revenue has increased drastically. So learning for us from this particular chapter, look at the concept how the thought process is evolved in the process of this assessment, which is relevant for the officer to apply audit provisions, right? So to start with, when we talk about assessment provisions, it includes assessment. Like assessment is dealt with tax liability, determination of a tax liability, done by self-assessment, done by the officer reassessment, done by the officer provisional assessment, done by officer where there is a threat of non-payment of taxes, and best judgment where assessee has not been filing returns. Now, these are all mechanisms, these are all more which have been defined under the term called assessment. There is one particular case law. I'll give you a backdrop. This definition looks very simple. If you think, say, why should we have a definition called assessment? And if this definition is not there, what is going to happen? There was one particular audit where the officer concerned has picked up the records which is available with him on the GST portal. Based on the data available, there is a movement of goods from one particular party to another party by way of an e-way bill. All the goods are supplied, all the goods are moved through e-way bill. There was no tax invoice. And this particular party has again used e-way bill for the purpose of transportation. Now, this originating person, this receiving person has never filed their returns. And this officer concerned, on the basis of the data statistics available in the e-way bill, he has issued a notice saying that, look, you are a person registered under GST, you are not being paying taxes. This notice was challenged in the High Court saying that, my lord, I have filed my returns promptly. In the returns, I have showed that there is no supply. How did the officer got a right to issue notice? The notice which was issued was challenged. Honorable High Court has examined, this happened in the state of Kerala. Honorable High Court has examined and they say, assessment includes review of returns. Assessment includes something called summary assessment. Now, this term summary, when I come to this particular section 64, you understand the importance of this. In summary assessment, the officer got to know this particular gentleman has raised e-way bills for some 2 crores. But if you look at his returns, The 2 crores never came into limelight. 2017-18 gone, 2018-19 gone, but still the 2 crores never came into the returns itself. Of the Honorable High Court has examined and say, look, the officer has the power to examine the documents available and a summary assessment whereby the issuance of notice is valid. That is how the audit mechanism initiated, and through audit mechanism, the officer concerned could recover tax where there was a bogus transactions. This means some transactions which happened when they never paid taxes altogether. So this is the importance for me to read the definition called assessment. Moving on further. Second definition, proper officer. Most of the times there is a challenge for this term called proper officer. Let's read the definition, understand, and then go further. In relation to any function, to be performed under this act. Now, registration, inspection, returns review, call for information, assessment, audit, physical visit. There are various activities, refund application. So all these functions which are performed under this act means the commissioner or the officer of central tax assigned for that function. Now, commissioner, he himself cannot do everything. So commissioner below his rank appoints various officers. So under this particular section 3, under GST law, they have defined principal commissioner, commissioner, joint commissioner, additional commissioner, assistant commissioner, deputy commissioner, superintendent, inspector, and department of intelligence. Now, all these officers have been defined under this term called commissioner. So commissioner or an officer who is empowered inspection, verification, all these officers are called as a proper officer. So this is one definition which is relevant to my proper officer. Audit. Most of us know we have been doing audit. It is there in our blood. First question which you appear for your intermediate, define your audit, define audit plan, define audit engagement. The various aspects we have read with respect to audit. Under GST law, this audit has been defined this way. The audit means examination of records. So we have discussed the other day, records and registers to be maintained. Whatever you have maintained, that will be verified. Examination of records, returns, the data which you have furnished to the department will be verified. Records along with that returns. And other documents maintained. What is that other documents? Could be your production register, could be your, if it is the owner of a warehouse, the register is maintained by the owner of warehouse or furnished by the register person. The documents like bank statement, audited signed financials. This audit means examination. Examination. Now, why do I examine? Under this act or the rules made thereunder, for the law and time being enforced, I do examine for what? Correctness of turnover declared. So the first objective is whatever turnover you have declared, does it match? If you recollect, students, there were notices issued left and right under service tax. When GST has come into picture, most of the registered people who have filed their income tax return. Why do they file income tax return? Because of a TDS provision. If the TDS provisions are not there, you imagine the fate of the revenue which is being collected. I would salute this gentleman called P. Chidambaram, the finest provision under income tax called TDS, tax deducted at source. Imagine the life of the revenue if the TDS provisions are not there. See, India is such a big nation where there is an intent to commit a fraud. It happens when there is a support from all the angles. However, my revenue has been at peaks because of my TDS provisions. Now, if you recollect, when GST has come into picture, all the registered people who have been registered under GST, they were getting a show cause notice from the GST department. What they have been saying, you are a registered person who have a PAN Under income tax, you file your IT return. In your form 26AS, there's an amount called income which is exceeding 10 lakhs. Under service tax and a threshold limit of 10 lakhs. So you had filed your IT return, you showed a profit, TDS credit scheme to the tune of say 40,000, where you have a 40 lakhs worth receipts. Now, say 4 lakh. Based on your TDS credits, when I go back, your amount credited as per 26 years exceeded the threshold limit, right? Now, correctness of turnover declared. Also, you have received a notice as per your 20, like a form ST3, that is your service tax return. You file your service tax return. In service tax return, you show turnover of 12 lakhs, but you file your ITR where your 26 years says that there is a turnover of 20 lakhs. Please explain why there is a difference. So I have a various means where I try to examine that there is a difference of turnover. Income tax is one source, e-way bill is one more source, bank statement is one more source. Now, if you these days, all of you are in exam leave, if you would have checked with your friends who have been working in the offices, income tax returns when they have been filing, they have been verifying something called Annual Information System, AIS, which is additional to your Form 26AS. All along, what we have been doing, we are just looking into 26AS and filing the IT return. But now, this AIS is taking out the kundali of the registered, that the taxpayer, where he has invested money, from where he got dividend, from where he got capital gains, from where he is getting this, speculation income. All this data, never ever the taxpayer reveals to the auditor. When the auditor asks, sir, there could be some money, I would have invested 1 lakh in so and so mutual fund. It is a SIP I have done. I forgot that there is so and so bank account from where the money is going in. Now, nothing goes beyond his knowledge. All this information is brought under AIS, Annual Information System. Some other window is there. Now, all this is cumulative together for ascertaining your turnover. From there, they'll say, based on your turnover, what was the taxes you're paying? Based on this information, how much is the refund you have claimed? Based on your records, what is the input tax credit you have taken? And finally, what is the overall compliance under this act? There's one particular aspect called anti-profiteering. I don't know how many of you have gone through this provision called anti-profiteering. Anti-profiteering is one another thoughtful amendment under GST law. Unfortunately, like your demonetization, anti-profiteering was also a failure phenomenon under GST law. Thought process is good, but application, when it comes to application, awareness, education, knowledge of the officers, knowledge of the business professionals, all comes together. So in nutshell, this is a definition for my audit under GST. Audit done by you or audit done by the departmental officer. They have this objective. They would like to see what is your turnover. They would like to see what taxes you're paying. They would like to see how much refund you have claimed. They also want to see overall compliance. So this is my macro view of audit expectation. So whoever officer assigned with the audit function, they use this as a boundary to do a audit function. Self-assessment. Now, simple definition, very short and sweet. It says that every registered person who is registered has to do a self-assessment for what? The taxes payable under this act and furnish a return for each tax period for payment of taxes. I, as a taxpayer, I assess what is the supply I have made. On that supply, what taxes I have to pay. This is a basic expectation. Remember, penal provisions. We have penalty. You as a tax advisor, you have to think when a penal provisions can be invoked. Tomorrow, we are going to touch something called demand and recovery, one of the finest topic which we have to look through. I would say interesting topic. Like when you read the chapter, you feel as if you're a government officer, you've been doing the job assigned to you under the government authority. So self-assessment, I just ascertain and I file my returns. Next is your provisional assessment. Provisional assessment is a window, is a mechanism. Yesterday I gave one example, like a electronic vehicle. When we think of electronic vehicle, I have a choice. I can buy a battery or I can lease a battery. Reason, the cost of battery is very high, lithium battery. The battery's life is important and the battery's functionality is important. That's the reason generally people don't buy a battery, they take it on a lease. Whatever happens, there is a free replacement and the onus is on the manufacturer. Assuming for a moment there is a business model, I don't know how much tax I have to pay. The taxable person is unable to determine the language used. They haven't said registered person. They use a language called taxable person. We have discussed the term taxable person. Who is a taxable person? A person who is registered as GST or a person who is supposed to register and pay taxes is called as a taxable person. A person who has been into activity of supply of goods or supply of services is a person who is unable, for what? To determine the value of goods or services. He is not in a position to identify what is the value. He is not in a position to determine what is the rate of tax applicable for that particular supply. Example, when Reliance got into a contract with the central government for the purpose of exploration of gas, natural gas. There is something called Godavari gas basin in the state of Andhra Pradesh. In the state of Andhra Pradesh, there is a gas, natural resources available beneath the sea. That particular natural resource, that is gas, which needs to be extracted. Now, Reliance, they have come forward in a bidding process and say to the government saying that, look, I have skill set, I have infrastructure, I have capital. Let me give a license from the government. The ministry has to give a permission for the purpose of exploring that particular gas. Now, if assuming that is a business model, I don't know what sort of gas is going to come. Could be a ammonia gas, could be a nitrogen, could be a carbon dioxide, something else. And based on that, I don't know what is the rate of tax. Now, this is a scenario where the law says that a person who doesn't know the value of goods, a person who doesn't know how to determine the rate of tax, that particular person can make an application. Such taxable person make a request to the proper officer for what? I'll write a letter. There's a form prescribed. I write a letter to the officer asking him the questions. My dear officer, look, this is a business model. Please tell me how to determine the value. Please tell me what is the rate of tax applicable for this particular business model. Until you come with a final order, let me know provisionally how I have to comply with the law. This particular proper officer, he will pass an order within a period not less than 90 days of the receipt of the request for allowing this particular taxable person to make the payment of taxes on provisional basis. Now, what is happening here? I make an application. My officer is understanding the nature of requirement and he is giving a permission for me to pay the tax on a provisional basis. Now, when I go for a provisional assessment, there should be a guarantee. What is that? Look, Praveen, I have given you permission to pay taxes on provisional basis. What if the taxes what you have to pay is much higher than what I have assessed? For that, they take something called bond. So I, as a taxable person, I execute a bond. What do I say? Whatever tax determined by the officer, the gap between what I have paid and what actually I have to pay. This gap I am going to pay. This is a bond which I have to execute with a surety. Once I execute a bond, then this particular proper officer, he will do the research work and he has to communicate an order within a period of 6 months. From the date of application, within a period of 6 months, the proper officer is going to give a final order. For what? For determining what is the tax that needs to be paid. So what if the officer was not in a position to conclude within a period of 6 months? So this officer will approach a joint commissioner or additional commissioner, explaining why he couldn't, pass an order within 6 months, and he'll seek an extension for further 6 months. And if really required, commissioner will intervene and he will give a time maximum for a period of 4 years for determining what is the tax to be paid. Now, is there a possibility where we may have this kind of business requirement? Example, IC, integrated circuit, IC manufacturers, integrated circuit chip manufacturers. Chips which are affixed, which are embedded to a system. I have something called your extended warranty. Let's take example of your laptop. A laptop which has been sold, there is a warranty for 3 years. What they say? Any dysfunction, we give you a warranty for 3 years. Now, when I give a warranty, there is a cost of say 10 to 15,000. Under warranty, I give a warranty for the chip. So this chip, when it goes out, I have to replace that. The rate of chip is 28%. But when I give a warranty, it is as good as a service. The question comes here. Should I consider that as a service and pay 18%? Should I consider that as a chip which is being replaced? When I give a warranty, I know chip is the only the part which is going to go out. So if the chip is replaced, 28% is the rate of tax. The question comes here. Should I do this way? Should I do this way? For the government officer to understand, when you talk about integrated chip, the government officer may not have the technology, may not have the business understanding, because when you look at the government offices, they're all completely from commerce background. They don't know your science, they don't know your chemics, they don't know your physics, they don't know your technology. For them to understand, for them to internally come with a business particular model, it may take 6 months with a special approval, another 6 months, or maximum for a period of 4 years. Now, so what if I got an order copy called final assessment? My final assessment is less than what I have been paying tax on a provisional basis. My officer asked me to pay every month 1 lakh. Based on the final assessment, I got to know that I should pay only 60,000. That means I have paid 40,000 more than what I have to pay. There comes your section 54. You file a refund application from the date of your final order, that is final assessment order. You have a time limit of 2 years. So from the day you got your final assessment, you compare what all you paid as a provisional assessment, that money you claim as a refund. If you don't get paid within a period of 60 days, you get an entitlement of interest of 6%. On the other hand, my final assessment is much, much higher than provisional assessment. What will I do? I have to pay the difference with interest of 18%. Now here, I have admitted, say if final assessment is higher than the provisional assessment, I'll pay the differential tax. So this provision says that the day you have received your final order, from the day you are paying taxes, the gap, whatever is there, you pay along with interest under section 50. Next, scrutiny of returns. Before I go for this particular slide, let me quickly see if there are any questions so far. There is a question from Gopinath. Sir, if input tax credit on purchases is at 0.1%, is restricted by Rule 96, under which option? Gopinath, if you are restricted under Rule 96, that is, you cannot export with payment of tax, there is a sub-rule 4A, sub-rule 4B. Under sub-rule 4B, you will be filing your refund application. What you will do, Gopinath? You will show to the officer the purchases what you have made, the exports what you have made. Because you have paid 0.1%, only that accumulation, you will be entitled to get a refund for that period. So answer to your question, Gopinath, I cannot go under 89 sub-rule 4, where a formula is there. Numerator by denominator into net ITC. I will not go under that formula. Where will I go? Under sub-rule 4B. 4A is your deemed exports. 4B is for your merchant exports. So that is the option I have, Gopinath. Mansi has one question. How people are able to hide the GST sales on large scale even with existence of so much of strict laws? Mansi, to answer this question, I'll take you to the way the business is functioning now. You just get into, I don't know from which part of India you hail from. I'll give my own example. A week back, I have inquired with one of my friends to purchase a laptop. I need 3 laptops to be purchased in my office. So I got a contact. I have a choice. I can go to the Dell website, HP website, or any other manufacturer, place an order on website. Rather, I prefer to give it to order to a local dealer. Why? I get the systems with all the software installed. I get a visibility of interaction. I had a better experience when I purchased on the website. I don't want to have that better experience. I want to go with a local dealer who is a trustworthy person. If something goes wrong with the system, I can get a replacement. So when I called this particular officer, the first question, I called this particular dealer. The first question he'll ask, sir, is it for your business purpose or a personal use? Please understand the question. Is it for your business use or is it for personal use? The moment I say business use, GST number. The moment I say it is for personal use, the question comes is it cash bill required? Is it a GST bill required? Now, various reasons made business still continues on a cash basis. Imagine look at your parents. Now, when we go for shopping with parents, they always go to the known person, and most of the purchases happens through cash because they have been brought up and they have been in that fashion. They never ask for a bill. Those shops you visit, never they ask for any bill copies. Reason, they buy without a bill, they sell without a bill. So many channels do exist even as of today, where we see BPL, below poverty line, not in terms of economic condition, BPL in terms of your tax payment maturity. The businessmen who are below that poverty line who still have not upgraded to pay the taxes promptly. This is the answer to your question, Mansi. Namita has a question. E-way bill data is auto-populated in GSTR 1. It is not auto-populated, Namita, but it was for a point in time. Later, they have stopped that. So how credit does not come? Namita, the example which I was telling you, from, say, I'll give an example. Namita, say Mansi, and I take example of Sunil. Namita sells transport goods to Mansi. Mansi in turn transfers these goods to Sunil. Now, when there is a movement of goods from one person to another person, there is just a delivery challan. There was no tax invoice. You have sold goods to Mansi, where you would have received cash. Mansi in turn would have supplied goods to Sunil again through a delivery challan. Now, there was no tax invoice. The value of goods routed is more than the value which you have declared in your returns. That is the example I was talking in relation to summary assessment. Coming back, scrutiny of returns. Now, this is a particular activity done by the officer. Now, we would have been thinking, what is the job the GST officer has got? I have filed my returns. It just goes and sits in that particular portal. There's a report, MIS, available to the GST officer. Officer just clicks a button where a report is thrown. Your output tax as per GSTR 1, so much. Your output tax as per GSTR 3B, so much. Your output tax as per e-way bill, so much. Or your turnover. There is a report called e-way bill report. There is a report called GSTR 1. There is a report called Form 26 AS. There is a report called e-way, like any other source. Now, all these reports are compared. Is it matching one to other? If there is a mismatch, let me inquire, let me send an inquiry. What does the proper officer do? The proper officer will match your data with various sources available with him, and he makes an inquiry. How? He issues a show cause notice. He says, Namita, I have looked into your returns file for the period April 2020 till March 2021, or let's go a little beyond. Okay, April 2021, we have filed IT return also. Now, for April 2021, 26 years, e-way bill, IT return, GST returns, and say annual information system. All this information was compared together. Officer says, in your IT return, you showed 48 lakhs. In your GST returns, you disclosed only 32 lakhs. Please explain why there is a gap of 16 lakhs. 16 lakhs, was it a job work? 16 lakhs, was it a exempted turnover? 16 lakhs, was it actually a supply where you're not paying taxes? So the officer gives a notice for which I have to respond back within a period of 30 days. Sir, the businessman got the notice. The notice was given to the chartered accountant. Chartered accountant says, look, IT return is going on. My due date for filing IT returns is of 30th or 31st. I don't have time to look into your information. So this particular taxable person or the registered person will go back and say, my dear officer, please give me an extension. There could be an extension. Now, I will go back to the proper officer. I'll give you a justification. My dear officer, I do admit that there's a 48 lakhs in my IT return. There is a 32 lakhs in my GST returns. There is an interest income, 10 lakhs. There is a mutual fund income, 6 lakhs. That 10 lakhs and 6 lakhs, 16 lakhs, I offered for income tax, but not offered for that. What is the proof you have? I'll give my mutual fund statement. I'll give my, this stock holding statement to explain what is the source of income which is not flown into my GST returns. If the proper officer is happy with your explanation, he will drop the notice. If the proper officer is not happy, then he will take an action on you with respect to issuance of a show cause notice. So what he will do? He will issue a notice under section 73. Demand and recovery. Connection of this section 61. Tomorrow we are going to discuss what will happen in case of a demand and recovery. That means how the proper officer can demand the taxes from you. So my section 61 is just a preliminary step before a show cause notice has been issued. Next. This particular proper officer, in the process of reviewing your data, please keep in mind that this is a little important. The proper officer is looking into the data. He was not happy. He was not happy with your data. Why? In your e-way bill, there is a outward supply to the tune of say 10 crores. In your GST returns, you just showed 2 crores. Why? My e-way bill shows 10 crores. My GST return shows 2 crores. Probably, I'm a commission agent. My 10 crores goods are received from principal. I received 10 crores. I received the commission of 2 crores. I was under impression as a registered person, because the goods are coming from the principal, I need not register. I need not show those transactions. I just showed my commission income in my returns. Possibility is there. Now, in the process of doing so, the officer feels that something is wrong. That means this particular person has been completely doing something wrong. Then he may conduct an audit under section 65. 65 is a mechanism where officer he himself conducts an audit, or he may feel that he needs a support from a external party. Special audit under section 66. Audit done by a chartered accountant or a cost management accountant. I'll give an example. Pharmaceutical industry. I don't know how many of you have done an internal audit, revenue audit, or tax audit of a pharmaceutical manufacturer. I'll not name the brand. You visualize the brand which you can think of. Pharmacy industry. COVID is one classic example. In Karnataka, there is a manufacturer who manufactures Dolo 650. Dolo 650 is a tablet which is meant for fever. This manufacturer imported goods worth some 100 crores. Out of 100 crores, he has used 25 crores of drug material in research and development. Now, what is happening here? I used some material for R&D. Now, whenever I do R&D, there are certain clinical trials. There are certain approvals which I have to do. I need to send some samples for getting a drug approval permissions. The business model is so complicated where I lag. I'm a assistant commissioner, or I'm a deputy commissioner, I'm a superintendent, I'm an inspector. For me, the information which is being provided was not getting into my head. I felt I need to have an external support where this officer, proper officer, will take a shelter under section 66, the help of a chartered accountant and a cost accountant. There is a separate slide, I'll come to that. He may call for a special audit. In the process of this scrutiny, he feels that an inspection, search, seizure is required. How does it happen? He feels that registration was taken. When I look at the registration certificate says 5th floor in the ATC towers at MG Road. Officer has a common sense. MG Road happens to be a prestigious area. Every city, if you see, there is a MG Road, Mahatma Gandhi Road. They put this MG Road for the very, very highly profile, highly important places. And that place is of a commercially high value. So this registered person registered himself as address called 5th floor, ATC Towers, MG Road. What is the nature of business? He buys 100 tons of steel. He sells 100 tons of steel. He buys 500 bags of cement. He sells 300 bags of cement. This registered fellow doesn't have additional place of business. This registered fellow has office in such a place where he cannot keep cement bags. You cannot even imagine the steel and cement comes to the 5th floor. Highly impossible. That fellow would have been storing cement in a place called a godown, in a warehouse, which was not registered, where officer felt I should do an inspection. I should do a search and seizure. Why? I feel there is a tax which has to be paid but not paid. Now, imagine all these examples. The officer who is looking into your returns, now what is he going to do? In his window, he could see your name. He could say, what is the nature of business? At the time of registration, you will say, these are the goods, these are the services which I am dealing with. This fellow also indicates, is there a warehouse? Is there a rented, is that an owned premise or a rented premises? Based on the information provided, registration certificate followed by e-way bill. When I look into the e-way bill transactions, Ultratech Cement raised a bill on me for 1,000 bags of cement. There is an e-way bill of a cement bag. Now, in a month of June 2021, Ultratech raised a bill on me. June 2021, if you see my outward supply, 0. Ultratech has supplied 1,000 bags of cement. I didn't raise any invoice in June 21. July 21, I waited and watched. Nothing happened. August 21, also I waited. Nothing happened. Officer felt something is wrong. Reason, 1,000 bags of cement, definitely you cannot store in that place, which is just a 30 by 50 square feet. At the time of registration, there is a rental agreement where he says, this office, registered person called Praveen, he has been operating in a 30 by 30 square feet, 900 square feet, where he cannot accommodate 1,000 bags of cement. Now, that calls for inspection. So all the provisions connected are linked with this slide called scrutiny. So he will initiate a proceedings for search seizure, inspection search seizure, and he will invoke the demand and recovery provisions under 73, 74. This is the importance of the slide which is under scrutiny under GST law. Next, assessment of non-filers of returns under best judgment. Under best judgment, there's a registered person who has not been filing returns. So this gentleman who is registered under GST law, who is a continuous defaulter. First, in the previous case, section 61, based on the returns, he has gone for a scrutiny. Section 62, assessment of non-filers of return. That means the assessee has been registered who have never filed the returns. Now, sir, when you file a return, on the basis of return, turnover can be ascertained. When the return itself is not filed, how do you ascertain your turnover? There I apply my provisions of best judgment. When I say best judgment, based on the material which is available on hand, what I will do? I'll see the registered person, has he been paying monthly GSTR 3B, monthly or quarterly GSTR 4, your final return when you surrendered for registration. If nothing of that sort happened, on the basis of the data which I have on my hand, I issue a notice under section 46. What they do? The officer has to look for the data. Now please imagine, the officer is not going to sit idle. Any officer who have been appointed as a proper officer within the jurisdiction, so there are 300 registrations. I'll just give an example. For a moment, I'm a proper officer. I have been posted in a place called Gindi in Tamil Nadu. In Tamil Nadu, Chennai, there is a place called Gindi. Gindi is a place. In this particular place, I have, say, 500 registrations. Based on the PIN code, 500 registrations are there. So there is a division called East, West, North, South. Assuming I fall in the North jurisdiction and I have been assigned with 500 registrations. So what I'll do, every month, I will take a stock of those 500 people. This 500 who are under regular registration, who are under composition. Composition, they'll come under quarter, I'll keep aside. Regular registration. Who have opted for quarterly return, who have opted for non-quarterly return. Quarterly return, again, I'll set aside. I'll filter down. Monthly return, say it comes down to 140. So what I have to do, friends, GSTR 1 to be filed on 11th, GSTR 3B to be filed on 20th. All 140 returns I have to review within a given span of time. Now, please put yourself into the shoes of article assistant. If the principal gives you 10 files to be finalized, GSTR 1, GSTR 3B, imagine the kind of pressure you have. The same pressure, 140 files on a particular proper officer. Imagine the kind of workload which is there. This particular proper officer has to look into e-waybill, look into the GSTR 1, look into the GSTR 3B, and then he has to keep sending a notice. Whenever information comes, he needs to attend to that, ascertain, and then call for further explanation. Similarly, in case of your best judgment, in this case, what happens? Out of the list of 140, assuming 40 returns are being filed, the rest 100 people, they never file the returns. There comes the acumen, ACUMEN, the skill set of the tax officer. What he will do? He will send a notice under section 46. For what? He will call for payment of taxes. He will say, look, on records, I have this information available with me. I determine that you have to pay so much of taxes, but you have not paid those taxes. Let me know why you have not supposed to pay that particular taxes. The moment that particular data is received, that is, notice is received, I get alerted. If I'm a genuine taxpayer, I file my returns. Now, when I'm thinking all these provisions, look at the kind of pressure. So, is there a time limit for the officer within which he has to respond, within which he has to do this best judgment for non-filer of returns? The law says that as a proper officer, you do your assessment within a period of 5 years from the date of filing a annual return under section 44. So the law says that, look, I understand the pressure on you. You apply your best judgment provisions, and within a period of 5 years, you do your assessment and issue a notice for recovery of taxes to be paid but not paid. Reason, like your articleship days. If I was given 10 days to do an income tax audit, it never happens. But if you do an audit, it never gets called itself as an audit. Reason, multiple data you tend to fail. Verification of bank statement, verification of input tax register, verification of inventory registers, calling for confirmation of balances, doing your math of calculations of percentages. Multiple data is there where a time is required. Similarly, in GST law, they have given 5 years from the due date of filing of your annual returns. For what? For the purpose of audit the officer to do a best judgment. Now, so what if I received an order? I have received a notice. If I act to the notice and if I file my return, whatever notice has been served will be withdrawn. Sir, notice has come, I haven't responded. Officer has passed an order. Within 30 days from the date of order, if I have filed my returns, if I have paid my taxes, my order which has been served is deemed to be withdrawn. Please understand, when they say best judgment, there's no rocket science. I have a e-way bill data for 5 crores. Officer says, sir, what I have done, I did the e-way bill data 17-18, 18-19, 19-20. I did the average. 17-18, the data shows e-way bill data of 5 crores. The average for 3 years shows 8 crores. I have set aside 5 crores. I adopted average of 8 crores. On the basis of 8 crores, I have demanded the tax. Now, actual turnover is 5 crores. The average came to 8 crores. Now, what I will do, I file my return within 30 days to set aside that order. Please keep in mind, if you don't file within 30 days, the order is binding on the registered person. He has to prove that why he should not pay tax on 8 crores. So for that purpose, the law says that if the registered person files the within 30 days, he files his return, then this order, whatever has been passed, it is deemed that it has been withdrawn. This is the mechanism to act upon the order. Now, what if? Moving on further, section 63, unregistered person. Now, all along we have been talking assessment, that is your scrutiny of return, a person who is registered but not filed his returns. So far, so good. Third category, assessment of a person who is not registered. Very, very tough task before the departmental officer. So section 63 talks about the assessment of a person who is to be registered but not registered. A classic example for this section 63, all those notices which you have received under service tax era based on your income tax return file. IT return, my 26A shows so much of turnover. I never file my returns. Now, those are all the cases where assessment of an unregistered person is invoked. Now, how does the officer gets to know? There is a division called anti-evasion. The anti-evasion department, they keep on roaming around places to places to find out who have been paying taxes, who are not been paying taxes. Now, they get to know that these are the people who have to register but not registered. I'll give one of my own experience in this case of an unregistered person, where I happen to interact with a GST officer who's in intelligence. Sir, how do you get to know the information that this so-and-so person has to register but not register? A wonderful example, a wonderful experience. Intelligence department, these officers, let's see, the way we watch movies, the same way these officers, there are very, very respectable, commendable officers who goes to the field. One of the instances it so happened, there's a big commercial information software technology park. There's one particular big building where there are close 30 companies who are operating their software services. So this particular anti-evasion person, he has gone there. The moment you go there, a security person stops you. Who are you? What you are coming? Where you are coming from? Where you want to go? So this particular anti-evasion officer has reported to security saying that, sir, I came for an interview. There is a housekeeping job. I have been called for a housekeeping job. Now, as you are aware, every day some sort of interview happens for security, housekeeping, lift operator, and no, your IT related jobs. So this particular gentleman has said that he has come for a housekeeping job. So he made an entry at security. While making entry, he saw the security person's badge. The security name is there, so and so Security Private Limited. He made a note of that security person's that particular company name. He went inside housekeeping. Now every housekeeping person has got a badge. So he went into this cafeteria. In cafeteria, there is a food stall. So he has purchased some tea, coffee, snacks. He has a bill. Name of the food supplier is there. Again, evidence is collected. He went into this particular housekeeping. He saw the name of, like, when you go to the washroom, there'll be a checklist. There'll be tick marks, routine work done, not done, etc. He made a note of the contractor. Then he went to the lift. There was a lift which was installed. He noted who was the lift operator, who was a supplier of that particular lift. So this particular officer did a 365 degrees review of right from security person till the companies which have been operating in that particular premises. As I say, this officer 14 days regularly used to go to that particular office, and to his surprise, none of the security person have stopped. Every day used to go. Today for security interview, tomorrow for housekeeping, tomorrow for software job. Multiple explanations used to go and multiple inquiries he has done. End of the 14 days, he has come back. He did his groundwork. What he has done? He called for the information. Fantastic verification. What he has done, based on the name of, there is a trade name. Based on that, he did a search for ROC website, for income tax website, and also local, this what you call municipal registers. So he has verified from when this security fellow is operating. So there is a section 153, 150, 151, 152, 153, where we can call for records from the other particular public offices. So what he has done from the this contract, they register with the local labor officer. From the labor officer, he called for the registers since when this security fellow is operating. Security fellow was operating since 2014 in the this particular what you call a license. When they go for a contract license, they need to give how many manpower are being operating, and also they will give which all companies they give their support services. So from the labor office, he got the information of this security officer, which all this companies this security person is working. Now he went into all those particular locations, and in addition, he saw who all have been operating. Now this is how the assessment of a unregistered person happens. Now, if you imagine, see, I honestly respect the government officers who are in intelligence and anti-evasion. See, there is good element, there is a bad element. If you see bad element, you live with bad element. Look at the other side. Look at the knowledge. Look at the information. This particular officer whom I'm talking to you is a government officer who is at the rank of a superintendent who gets paid 60,000 per month. And imagine the kind of work he's done. he was not trained to go and collect these statistics. He was not trained. There is something called labor office. He went into the labor office, called for the records. Now, this is how the assessment of unregistered persons is done, where a taxable person who's to get a registration, but he has failed to get a registration, or a person who took a registration. Now, these people you would have seen, most of you in your articleship days, you would have seen that client comes to your office for the purpose of GST registration. You get a GST registration. He files his returns for 1 or 2 months, maybe at best 6 months. After the 6 months, he never comes back to your office. Now, those are the people who got the GST certificate. Why? When they go for a tender, when they go for a auction, they need to just give a GST number. It is just an entry point. None of these companies validate whether the GST number is valid, whether GST number is in existence, whether he is filing returns and all. None of these aspects are done. So for this security fellow to get the contract, he just needs the registration number. After 2 months, what happened? 6 months continuously he didn't file his returns. Section 29, what it says, if a registered person defaults to file his returns continuously for a period of 6 months, by issuance of a show cause notice, they cancel the registration. Now that fellow has cancelled the registration. In spite of cancellation, security fellow happens to happily, go merry. He keeps on continuing to do his business, collects the GST. Few cases he never collects the GST. He says, sir, I have been operating as a security. Someone said that this is under reverse charge. Private limited company, nothing is under reverse charge. Or he finds of those organizations like your government authorities, like your panchayat, municipality, or revenue electricity board, or some this tribal board, some board where he has got some cousin or some influence, where he happily collects GST, where no input tax is enjoyed at all. Now, these are all the people they call as unregistered person. So this particular officer, proper officer, he finds out what is the tax which he has to pay by that particular taxable person using all his acumen, and he serves an order for the purpose of recovery of tax. Similar to your section 62, there is a time limit of 5 years from the due date of filing of annual return. So this gentleman never registered. How will you say 5 years? Now please remember they have used a term called taxable person. The moment a taxable person comes into picture, a person ought to register and pay tax but not paid. That fellow is bound to register and pay the taxes. The moment he gets registered and pay the taxes, all his late fee and all interest, everything will be recovered. Now, most of your service tax notices, I don't know how many of you have seen the service tax notice. When that officer serves a notice under service tax, he says, every half year, a penalty of 20,000 is there where you don't file your return. Assuming 3 years, there is a scrutiny. For 3 years, 3 into 2, 6 half years. They say 20,000 into 6, 1,20,000. Let me know why I should recover the late fee for not filing of returns. Lady, you haven't registered yourself. Officer does not stop there. He goes beyond one step and ahead and says, you ought to have registered and filed your return. There's another registered person who have been paying his returns. A genuine taxpayer who belatedly filed for a day, there is a late fee collected by the government. Now, you being an unscrupulous taxable person, let me recover that non-filing of return late fee also along with your payment of taxes. All this is an assessment done in relation to unregistered person. Law gives me a 5 years time limit. Now, from section 63, I move into one more orbit called section 64, summary assessment. Again, these are the special cases. I would say these are all special cases where a proper officer on a evidence which comes to his knowledge saying that a tax which is to be paid but not paid, tax liability of a person which comes to his notice, where he takes a prior approval of an additional commissioner or a joint commissioner, where he proceeds to assess the tax liability of that particular person. Why? To protect the interest of revenue. To protect the interest of revenue. And he issues an order called assessment order, where he has a sufficient grounds to believe that any delay is going to adversely cause impact to the revenue. I'll give an example. Live, where we have come across this summary assessment. There was if you recollect, students, inverted duty structure. Inverted duty structure. We have discussed the example of a inverted duty structure. I given this business model. Imagine where this summary assessment comes into picture. There is a software company. This software company has exported services out of India. A software company filed a refund application under Section 54 for accumulation of input tax credit. So this software company, when they filed their refund application, as per the refund application, there is a form called Form 2, where my list of bills, input services, inputs purchased, input services purchased, vendor wise, I need to give the list of names who have charged GST to this software company. While scrutiny was being done, look, this particular case, how the assessment is being done. Now, let me come to Excel file so that you will better understand this example. Say, there is a software company called ABC Private Limited. This company has sought for a refund under Section 54 for accumulated input tax credit. Part of this documentation what they give, there is a statement called Statement 2, which is nothing but detailed ITC on inputs and input services. Inputs and input services. Now, the officer was going through line by line, who is the vendor, what is the GST number, what is the goods or services supplied, what is the GST charged. Now, this is a list which is there. Here, in the list, there is a vendor by name, say Mr. A, Mr. X, a proprietor, supplier of furniture. Supplier of furniture. Now, visualize the contract ABC Private Limited Company, which is a software company. X, who is a supplier of furniture. This particular private limited company have got a interior work done for the one of the floor. Chairs, air conditioner, you can say tables, and some sort of partition work. Now, it's a composite supply. Now, chairs 28%, AC 28%, tables 18%, partition work 18%. Now, all the furniture has been imported. Take example, your Featherlight, one of the premium brand, say Featherlight. All these imported chairs which have been high-end furniture, they have a rate of tax of 28%. Now, this particular X has considered this particular contract as a composite supply. So this gentleman, what he has done, Mr. X has considered this as a composite supply and charged GST at the rate of 18% on furniture. Now, X raised a bill on ABC Private Limited. Now, before the GST officer, ABC Private Limited has come with a refund application. What does the refund application say? There is a supplier called X who has charged GST of 18%. Now, this proper officer verifies reviews the returns filed by Mr. X. Look at this case very, very carefully. When officer looks the returns filed by Mr. X comes forward with a refund application under section 54 for inverted duty structure. Now, I'll put this into a box. Now, what is happening here? X has filed a refund application. Fortunately, it came to the same officer. Now, when the proper officer is reviewing the returns of Mr. X, what happened? X was filing all GSTR1 properly, GSTR3B. There was a short disclosure of turnover. In the GSTR1, it showed a turnover of 50 lakhs. Why? If GSTR2A, GSTR2B, whatever you call, if it is not appearing in the books of ABC Private Limited, ABC Private Limited will not release that 50 lakhs. I repeat, ABC Private Limited will not release the 50 lakhs. I'm just giving an example. 50 lakhs on that, say 18%. He will never release that company. This private limited company will not release money to Mr. X. Now, Mr. X has filed a separate refund application for one of the period. Now, when the proper officer is reviewing the returns, like what he's doing is reviewing all the returns of the vendors who have been given by ABC Private Limited. In that list, one of the vendor called X is appearing. When X data is being reviewed, this X has been filing GSTR1, also GSTR3B. Why? If it doesn't file GSTR3B, e-way will be blocked. So not to have a wrath from the department, it showed, say, 50 lakhs in GSTR1, it showed 10 lakhs in GSTR3B. So what is happening here? Almost all, 10 by 50, that is 20% of the turnover only is offering for tax. What happens to the balance 80%? Siphon is enjoyed by Mr. X. Now, question to you. As a proper officer, assuming you are a proper officer, will you hold the refund application of Mr. X, or will you hold the refund application of ABC Private Limited, or you will hold back refund application of ABC Private Limited and also Mr. X? What will you do? You will hold only Mr. X refund application, you will hold back ABC Private refund application, or third option, both the refund applications you will hold back. What will you do in this situation? Let me see your answers. I could see a couple of interesting questions in the question window. I'm happy to see these questions. I'll answer these questions one by one. There's one question from Sumit. What Sumit is asking? So what is there a possibility to have a different 2A, 2B is in existence? What vendor has filed should match with the physical invoice what you're having. This will be questioned only at the time of departmental audit. That is, I gave an example of proper officer now. When you file your refund application, Sumit, the physical invoice what you have and the invoice filed by the supplier, if there is a mismatch, possibility that department officer will stop your refund. There's one question which is raised by Mansi. Who can get into intelligence division? What is the qualification to get into this intelligence division? I'll answer to your question, Mansi. Meanwhile, students, please respond back to that question called ABC Private Limited, X, and both the cases. Now, Mansi's question, What should be the qualification for one to get into anti-evasion, that is intelligence division? Mansi, there's no qualification as such. You have to get into IRS. That means you have to give your civil services to get into the central GST. If you happen to plan to get into state GST, every state, like your civil services, state level, there is a separate entrance examination. You just need to crack this entrance examination, get into the department. Once you get into the department, on the basis of the training, in the process of training, you have to showcase yourself with your knowledge. On the basis of your knowledge and skill set, the commissioners, principal commissioner, they generally indicate these offices. My experience, Mansi, all these people who have been working in this intelligence and evasion, some percentage come through influence through like local MLA, MP, or through central ministry. Some people come with merit. You get recruited through IRS. The moment you get through your civil services, you will be given a choice, IAS or IRS. You prefer IRS, you join at the post of an assistant commissioner. On the basis of your knowledge, on the basis of your experience to deal with the cases, in the process of training, the so-called principal commissioners, they have a watch on various offices. On the basis of their audit, recovery, and inputs, they choose and they recruit them into anti-evasion or intelligence wing. This is the answer to your question, Mansi. Coming back to this Excel file, what I've asked you in front of you, which is ABC Private Limited and Mr. X. There's a question from, there is an answer from Sunil where the proper officer should hold back Mr. X application, refund application. And on the other hand, Mr. J. Srivastav, he says, it is good to hold back both the refund applications. I agree to the answer which is given by J. Srivastav, where I happen to be a proper officer. I hold back ABC Private Limited. I'll also hold back Mr. X. Why? I'll tell to ABC Private Limited, look, Mrs. ABC Private Limited, you have been filing your refund application. I feel that there is a suspicious transaction. Let me get myself comfortable whether you have actually purchased furniture worth 50 lakhs from this particular entity called Mr. X. And because we see that there is a bogus transaction, we feel that there is a suspicion. Now, based on this particular information, I'll come back to my PowerPoint where the proper officer has a reason. The proper officer has a reason, sufficient grounds. He has a ground to say, my dear commissioner, if I give a credit to ABC XYZ Private Limited, possibility that Mr. X and XYZ Private Limited have hand in glove. So let me do a thorough scrutiny of Mr. X. If I feel X has done a fraud and ABC Private Limited are genuine, how I do? I go for a inspection. Let me verify the 50 lakhs worth material. Let me get myself comfortable. And then let us give a refund of XYZ Private Limited. That is how I apply the provisions in relation to scrutiny assessment. Where the taxable person to whom this liability is to be assessed, which is not ascertainable, and there are certain goods where I cannot readily determine what is the liability of that person, or if these goods are lying with a transporter who happens to be an agent of Mr. X, what I can do, I can take the possession of those particular goods. Now, an application made by the taxable person within 30 days from the date of receipt of the order, the AC or the additional commissioner, joint commissioner, if they feel that this order passed is erroneous, they can withdraw that particular order. So most of the time, it so happens that what example I gave, which is a live example, where Mr. X was a culprit. There was a representation made by a consultant on behalf of Mr. X saying that to the additional commissioner, sir, there was a wrong interpretation done by the assistant commissioner. Please take back the order passed. There is a possibility that application can be made to additional commissioner to prove that assistant commissioner is wrong when this summary assessment has been passed. So additional commissioner or joint commissioner, they will look into the facts, and on the basis of the facts, they will either drop the order or they will instruct the assistant commissioner to go and issue, make a demand and recovery under section 73 or section 74. This is to do with your section 64. Before I start with this particular thing, we are at 8 o'clock. Let us have a break of 5 minutes. 8:05, let us resume back. Let us continue with our next topic of discussion on audit under GST law. Let us have our discussion on audit under GST law. So before we start with this topic called audit under GST law, let me just see quickly if there are any questions further from the students. Okay. So far so good. No further questions are there on the topics what we have discussed. Now, audit by tax authorities under GST law. I'll give you the backdrop. Then we will go to the provisions. Most of us have experience of the department audit, and some of you who doesn't have an experience of department audit, you don't have an exposure to indirect taxation. You just had a experience of income tax. How it happens, I'll just give you a simple language. Then we will read through the provisions. The departmental audit these days, especially, I would say last 10 years. Purely the audit is happening on the basis of experience and expertise of the team who is coming for audit. I repeat, the audit is being happening only on the basis of experience of the main person who is leading the audit and the knowledge of the officer who has been leading the team. That means to say, they will come for an audit. They will have some experience of that nature of business. They will say, okay, there could be some excess input tax credit. There could be some inventory shortage. There could be some mismatch in returns file. There could be some data in your audited financials. They know certain areas. That's all. That experience they will apply for the purpose of concluding an audit. What they will do, they will have a discussion with the assessee. They will see what is the nature of management. Are they very strict and rigid, or is the management little okay kind of management? Based on the conversation with the finance guys, they make a understanding and then they conduct a concluded audit. This is just one version, one side of an audit. The other side, it is a painful thing. You give some information, based on that they'll call for additional information. You give the additional information, they'll say, no, not this fashion, you give in this particular fashion. They'll give you a big checklist and they'll say, you fill this checklist and give me back. Whatever checklist you have built, on the basis of that, they will confirm that this is a gap which is there in your revenue, this is a gap which is there in your input tax, pay this taxes back. So this is how precisely audits are done under GST law. We will understand from GST section 65 what is expected from an audit and what is happening. To start with, commissioner or an officer who has been authorized by the commissioner, he may undertake the audit of a registered person in a particular frequency and in a fashion they want. Frequency, once in a year, once in 2 years, once in 3 years, once in 5 years. Internally, they have their own set of guidelines. A category, B category, C category. A category, assessee, registered person who pays more than 1 crore as tax. B category, assessee who's paying tax 50 crores and above up to 1 crore. C category, like assessees who have been paying from whatever be the base amount till 50 crores. A category, B category, mandatory audit should be done once in 2 years. C category, once in 3 years to once in 5 years, they pick up on the basis of periodicity, on the basis of time availability. Now, this is not defined by GST law. Internally, the department has got their own manual based on which they have come up with that. Audit can be done at the department or audit can be done at the registered premises of the assessee. Experience from the previous and present, the central GST officer who happens to be an excise or service tax, they prefer to visit the premises of the registered person. State, that is the VAT authorities, they expect the assessee to come to their premises. So audit can happen at the place of business of the registered person or at the office of the GST officer. Right? Now, before commencement of audit, there should be a notice to be served. Without notice, audit cannot be commenced. Now, once an audit has been started, generally within a span of 3 months, this audit has to be concluded. Generally, within a span of 3 months, this audit has to be completed. Where I have not finished within 3 months, I have a reason why this audit could not be completed within 3 months, then the commissioner may extend that particular period further, not exceeding 6 months. So originally 3 months is the time given. If I have a reason why I could not finish within 3 months, if I give a genuine reason to the commissioner may extend that 3 months to further 6 months. See, that means 9 months is the period I have received for the purpose of conclusion of audit. Now, when you talk about this statutory period of 3 months and statutory period of 6 months, there is a couple of business people who raise a complaint to the commissioner's office. There are genuine taxpayers, businessmen who are genuine, who are straightforward, who are very prompt in terms of paying taxes. These people, they feel audit authorities as aliens. They don't prefer the audit officers to come and sit at their premises, or they don't want this audit activity to get prolonged beyond the period of 3 months. So what does this businessman will do? They write a letter to the commissioner saying that, my dear commissioner, under section 65, your team has a time limit of 3 months. Within 3 months, let them get the audit completed and get out of my premises. Now, I'm using language, that's how the businessmen look at the department audit. Now, statutorily, the 3 months, 6 months has been set as a limit. Now, understanding this pressure, they have brought this explanation. I would say very, very important. This explanation is very important. Reason? Government has looked into these provisions and they say, for the purpose of this section 65, commencement of audit means the date on which records and documents called for by the tax authorities are made available by the registered person, or the actual commencement of audit at the place of business, whichever is later. So the department always takes a shelter under this explanation, saying that, look, to call for that 3 months or to look for that 6 months, the day you as a registered person has provided all the records, all the documents which I have asked for, that is the day from which the 3 months should start. Let me come back to my Excel file to make you understand with this particular computation. Say a notice has been served. This is audit under section 65. Notice has been served on 15th of Jan 2021 for commencement of audit. Now, I know that the notice has come, I have responded to the notice, and I count 3 months. Saying that on or before 15th April 2021, audit should be closed. Now, this is a expectation from the businessman. The moment I receive a notice for commencement of audit, the day, email has come on 15th January, I responded to that information. Now, reply with data provided on, say, 18th Jan 2021. Additional data provided on 25th Jan 2021. Reconciliation or explanations finally provided on say 20th of March 2021. Now, these are the various dates, students. 15th Jan, I received an email. So what I did, I responded back on 18th Jan. Again, they said, Praveen, you gave this data, this fixed expenses schedule is not there. I have sent on 25th Jan. Department fellow asked, Praveen, you gave your P&L account where the revenue was shown as, say, 132 crores, but your GST returns shows a turnover of 130 crores. Explain why there is a gap. I responded back to their inquiry on 20th March 2021. Now, with this dates, student, let me know this contention of the taxpayer that audit should have been closed on 15th April 2021. Is it right or wrong? My contention as a businessman, the moment I received a show cause notice on 15th Jan for the commencement of audit, I have said that 15th by hook or crook, 15th April 2021, audit should have been closed and audit report should have been given. This is my contention. But if you look at the history, last information was provided on 20th March 2021. What would be your answer? And what you understand under section 65, the 3 months as a time limit given to the officer concerned. Please put your answers into the question window, ma. Please give your answer. Harish has, Venkat says 15th April 2021. Okay. Sumit says 3 months should be calculated from 20th March 2021. Okay. Venkat, yes, you have to read this as if the day when last information was provided to the satisfaction of the officer, that was the day audit has been commenced. And Sumit, your answer is right, ma. Answer is no, the contention of the taxpayer is wrong. 3 months should be calculated. 3 months should be calculated from 20th March 2021. So accordingly, the date for closure should be 20th June 2021. This is the target date for closure. So this is the answer for this question. Hope Venkat it is clear, ma. Coming back to our presentation. Yes. So the explanation says that the day when the information was made available by the registered person, from there I would commence this, I would calculate for 3 months. Now, in the course of audit, the proper officer may call for additional information. The proper officer may seek for support, like inventory verification. Officer says, Praveen, I would like to verify your inventory. Can you arrange me for verification of inventory? Proper officer says, Praveen, I would like to go and verify your factory premises. I cannot stop the officer. Officer says, I would like to watch your production process. Now, assuming for a minute, the assessee, registered person, happens to be a particular subsidiary of a Japanese company or a subsidiary of a Korean company. They cannot put a condition saying that, my dear officer, my management has a policy, the production process is confidential. I cannot let any third party to get into production area. Now, the section 65 says that facility to verify the books of accounts or documents, furnish information as required, render assistance for timely completion of audit. So he has to facilitate for the books of accounts or other documents. So what is that other documents? Production records, production register. You gave your stock summary. You said that this is the amount of physical stock as per your books. I want to verify your production records to say, does it match? I want to see the stock available in work in progress at your production. Now, whatever facility, whatever record to be verified, they cannot stop the auditor. They have to facilitate for going and verifying the process concern. So this is the additional expectation in my audit. Once the audit is concluded, within 30 days from the date of conclusion, this auditor who has conducted the audit of the records shall give his findings, and he will explain what is the right available to the registered person and what is the obligation casted on the registered person. So this audit report should give saying that, look, these are my audit observations. You don't have a name board where GST number is to be printed but not printed. You have to display registration certificate. You have defaulted in that. It is your right. It is your obligation to have your name board displayed. You have to maintain a register where list of vendors has to be maintained. You have purchased some scrap which is worth so much of value, but you never maintained from whom that scrap was purchased. Details of the supplier was not available. Non-maintenance of registers under section rule 56. So all those observations will be mentioned, saying that for each of this is the obligation which you have defaulted. And if you have felt that this observation is not proper, you have a right to report back to me with a due notification or the provision which you have understood as per your knowledge. And once the audit is concluded, where officer is not happy with the submissions given by the taxpayer, then this particular officer may invoke the provisions of 73-74 dealt with demand and recovery. Tomorrow's session, we will see in detail how this 73-74 is going to work out. So as of now, officer conducted an audit. He gave his observations. Reply was given by the assessee. Assessee's reply was not happy. Then he can go for recovery proceedings under 73-74. Now, in the process of this audit, that is under section 65 or maybe under your section 64, which deals with your summary assessment. If the proper officer feels that in the process, there is a special knowledge required, looking at the nature and complexity of the business, then the proper officer who is not below the rank of an assistant commissioner is of the opinion that there should be a turnover which was mismatched, or there is a ITC which is not within the normal limits which has to be there. He will take an approval of a commissioner for the purpose of special audit under GST law. I gave example of pharmaceutical business. Officer was doing an audit. He looks that there is a purchase, imports happen to the extent of say 80 crores, but he supplied this particular pharmaceutical industry, made a supply of 2 crore, 3 crore, 3 crore, 3 crore, that's all. There was a R&D happening for 6 months, nothing came out. So he was worried that why this entity should not be having done by a special audit. So that is how he takes the approval of a commissioner, where commissioner in writing he will give a approval to get this audit done by a chartered accountant or a cost accountant. Now, there is an empanelment, students, for your knowledge purpose. Under GST, as of now, this was not called for. Prior to GST, Central Excise, every commissionerate, they have a notification issued. They have called for expression of interest by a firm of chartered accountants. Under excise law, a firm of chartered accountant was given an opportunity to file their expression of interest for the purpose of special audit. So generally what used to happen when there is an input tax mismatch, when there is a turnover mismatch, where the nature of business is little complicated, where they would like to draw the experience of a chartered accountant or cost accountant who's well versed with the disclosure of financial reporting. One classic example. Say there is a listed company, there is a software company. We know that a listed company who's having a parent company listed in a foreign nation, compliance with IFRS is required. Now, when I go for my Indian accounting standards compared with IFRS reporting, there's a lot of mismatch with respect to the turnover. There is a lot of information which goes with respect to your sundry data, sundry creditors, revaluation of books of accounts. Now, this could be area where they take the shelter of a chartered accountant to review the disclosure to see whether the revenue has been properly disclosed in the returns. Now, this is the support which they take from a professional. And this professional, so-called chartered accountant or cost accountant, once they get an appointment, within a period of 90 days, they need to conclude audit and they submit a report to the assistant commissioner. If they feel, so you have given 90 days, we could not complete the audit because a lot of information is being asked, we need little more time. On an application, additional 90 days will be given for the purpose of conclusion of an audit. And once this audit has been done, that is a special audit has been done, what this particular provision says that, look, though this assessee was audited by a chartered accountant under Companies Act, under Income Tax Act, or under any other law, if the commissioner feels a separate audit will be called for preparation of books of accounts for that particular assessee. Reason, so there is an agriculturist for which books of accounts are audited and income tax audit is done. There your 3CD has been given. Commissioner or the officer feels that books of accounts need to be rebuilt for the purpose of the special audit. They may do so for preparation of your new set of books of accounts. And any findings which are made by this special audit, first and foremost, they give an opportunity of being heard. On the basis of that, they take input from this particular assessee. And once the audit is concluded, they take a report and they initiate recovery proceedings under 73, 74. And please keep a note, this audit being a special audit, commissioner will make the payment for the special audit and the assessee has to make good of the fees concerned. This is how generally a special audit is conducted. Next, the hardcore important discussion for today, inspection, search and seizure, section 67. Inspection, search and seizure, page number 18.1 of your institute material. Before this, with respect to audit and assessment, any questions you have? Section 59 till section 66. Any of you have any specific doubts, which you want me to review once again? Akshay says audit is a time-consuming process and they require more time. Yes, Akshay. That is the reason they brought in this explanation. They keep on taking time, saying that, look, I called for the data, you never gave the data. Assessee gives the data. Again, they will go back saying that, no, this data I have asked, you have not given for. Moving on further, students. Inspection, search and seizure. This particular inspection, search and seizure is covered under section 67. So this particular provision says that an officer not below the rank of a joint commissioner, only a joint commissioner or above joint commissioner. That means joint commissioner, additional commissioner, commissioner. These are the people who have a right to invoke the provisions of section 67, where they feel a taxable person who has suppressed. What do you mean by suppression? Whatever details they have to furnish, they have not furnished. Or a transaction relating to supply of goods and services of both. Okay, this fellow has suppressed what? A transaction in relation to supply. Or there's a suppression in relation to inventory. Or there's a suppression with respect to excess availment of input tax credit. Or there's a suppression in relation to contravention of any of the provisions under this act. One example I'll give you. Contravention, supporting a person knowingly that this is a unlawful activity. Example, a transporter. Transporter knows that transportation of goods from this place to this place is a sinful activity, is an unlawful activity. Knowing that this is an unlawful activity, he has been party to the transaction. A person, that is a taxable person, contravention of the provisions of the act, is also called to be a contravention. Now, any of these occasions where a joint commissioner has a reason, has a knowledge to believe, then or a person who is transporting the goods, or a person who happens to be owner, operator, or no owner of a godown in charge of a particular place where goods have been stored without documentation for that. In those cases, the joint commissioner, in writing, he will give a authorization to a proper officer for what? To inspect. Now, keep in mind, any officer who comes for an inspection, there should be a authorization. There should be an authorization. Now, I'll give you one information, a tip right away. Please keep in mind, never ever get panicked. The moment an officer comes for an inspection, don't surrender yourself just like that. Ask the proper officer, why you have come for inspection? Do you have a reason to believe? If he says, yes, I have a reason to believe, show me the authorization given by a joint commissioner or a commissioner who has authorized you to inspect my premises. If the person who has come for inspection does not have that authorization, you can freely say that, my dear officer, I know that section 67 gives a permission only in writing. If you don't have that permission in writing, sorry, I cannot permit you to do an inspection. So what we have to do, whenever someone is coming for inspection, you have all the rights to question, show me the authorization. So if this officer says, look, I have an authorization, it is there in my office, tomorrow I'll get you that paper. You say, sorry, please come back tomorrow. I'll permit you to come inside only tomorrow. If you have come as a guest, you want to have water, you want to have tea, coffee, please come and have tea, coffee, please go back. I cannot let you inside. Most of the cases it so happens, this anti-evasion or vigilance people, they go for a verification. Just like that, a place where they have gone for inspection, if they have sufficient time, they walk into the other premises. They say, look, this is my identity card, I came for inspection. They come, done as a full force with the authority. Like the police comes for verification, they walk in, they barge into the office. Make yourself comfortable, make the officer comfortable. Say that, sir, you have come for inspection. I completely appreciate your purpose. Before that, please show me the authorization. If the officer does not have that assignment note in writing, you can very well stop the officer. If the ego of the officer is getting hurt, don't worry. You can always say that, sir, you know your right, I know my right. So here, the law is expecting that for the inspection, officer cannot just like that walk in as a guest. Bina bulaye aaye mehman. A guest who has come without even intimation, without even invitation, don't entertain that guest. Reason, they come with a different expectation. So every person has got different expectation. You say that as per the law, unless there is a clear in communication in writing, I cannot let you for inspection. Where the proper officer who has not below the rank of a joint commissioner, in process of inspection, which was carried out, which actually deals with confiscation. What do you mean by confiscation? When someone has come for verification, there are inventory which are lying, which have not been accounted for. I was giving an example when we are talking about records and registers under GST law. Material has come, a truck has come for unloading. The truck which is there in front of the factory, it has come for loading or it has been loaded, whatever be the purpose. The moment the officer has come for inspection, everything will be halted for a while. So they will lock the security gate. No vehicle should go out. No vehicle should come in till their inspection is done. So if the officer believes that the goods which are there are liable for confiscation by unaccounted, unexplained, unauthorized. If any of these three things happen, they can confiscate the goods. Or documents or books are things which in his opinion, that it is useful or it is relevant for proceedings under this act. Goods are there unexplained, or they believe that this information, this records are relevant for me to proceed or do a assessment under this act. Example, civil construction. In most of your construction contracts, if you walk into the sales and marketing has got registered where all they have got money for a booking. They keep a track. Plot A01 was allocated to Mr. X. Plot A232, A322 was sold to so-and-so party. There's a lot of information which has not forthcome in the written file by the registered person. In the process of their investigation, they have come across some data. Officer believes that this records, these books are relevant under his assessment. So what he can do, or there are information which is secreted in a place. He may authorize in writing the officer to search that place, or that particular officer may, when there is a secreted information, may break that particular safe custody. He may ask that person to open and let permit those particular items. After the scrutiny, he will take that confiscated goods and he will seize what goods he wanted to seize. And he'll give a notice on that particular person. Assuming that you would have watched this movie. What was that? Special 24, Special 26. This one movie where Akshay Kumar plays a leading role, who in a dice of a CPA officer, they go for raid at various places. There will be one instance where the items which they want to seize is of a very high in nature. They take the help of an income tax officer for the purpose of moving those goods. So if the officer feels that the goods are of so bulk in nature, he cannot seize, confiscate and take it to a separate place. He will ask the registered person to keep those goods in that particular premises. And this particular officer, whatever goods he has seized, whatever documents he has seized, he can retain with him as long as he feels that it is relevant for his examination. As of now, there was no clear-cut timeline. They say if the officer feels that it is required for 3 months, he can hold it for 3 months. If it is required for 6 months, he can hold it for 6 months. And those data, those records which are not relevant for his assessment, he has to return back within a period of 30 days. I repeat, all the records, whatever he has taken, he'll segregate important information, unimportant information. Say unimportant information, the school notes of children of the registered person, what he will do with the homework and classwork. So those books, those registers, he will give back within a period of 30 days. It so happens that when they do this scrutiny and all, they have a suspicion they take even the school bags of the children. So all those data, they'll give back within a period of 30 days. Now, you would have watched in movies, Todna Fodna, means breaking a wall, breaking a particular ceiling. All these have been vested as a right to the office under Section 67. Wherever they feel that there is a locker in a bank to be opened, there is a separate safe to be broken, they can do all that as per the law. Now, there is something called Panchnama, means whatever registers have taken I make a list saying that Praveen, at so and so date, so and so time, we have conducted the search of your premises. These are the list of registers. These are the goods which are available. I take these goods along with me. They take a signature of Praveen called Panchnama. A copy of Panchnama will be given to Praveen. And if I have to take a shelter of a legal counsel, I will ask for the copy of those registers to give it to my legal counsel. And the officer has a choice. If he feels that giving those documents to the legal counsel, there is a susceptibility, there is a no, the case may judicially get affected, means the information, the confidential information may get secreted. So he will say, I cannot give till the final assessment happens. Now, so what if these goods which have been taken, the assessee is putting a pressure. He want to take it back and give it to a particular assessee. He want to use it in manufacturing process. So what the officer will do? He will do assessment of the value of the goods. He will get the bond executed on the equivalent value of the goods, and he will let the goods go, means take back by the registered person. The bond, when he is executing, tax, interest, penalty, whatever is best feasible, he will take a bond from the registered person. Now, these goods, what I have taken? Option 1, do the assessment and recover the tax. Option 2, give a release on provisional assessment basis. Option number 3, do a final assessment and decide what to be done. So the law says that 6 months is the time limit. Within the day of seizure, you determine what is the tax duty to be paid and return back those goods to the registered person. And if this particular proper officer feels that 6 months is not good enough, extension of 6 months can be given. This is all procedural. Examination point of view, don't worry. You should have practical experience. When SSC comes to you, you should know the process. Just understand the basic process. So what if the goods which have been seized, confiscated, are perishable in nature? Like example, the goods which have been taken, fish, meat, eggs, or some eatable items, or some chemicals which are which get spoiled if further process is not done. Then what they do? They will, considering the reasons which is relevant, they will dispose of that particular goods by way of a public notice. Now, in entire process of the search and seizure, my provisions of CPC, Code of Criminal Procedure, will be allowed. Where, if you recollect, once a particular search and seizure is there, you have a right to arrest a particular person if there is a criminal offense, if there is an economical offense. So ED, like whenever ED search happens, whenever an income tax search happens, whenever a GST search happens, they have all the provisions as per CPC where they take the protection of a local police. If the GST officers want to visit a public, known public officer or a public government servant place, they cannot just go and do the search and seizure. They take the protection of police for the purpose of doing this activity. And the police is bound to help the GST officers because CPC provisions are equally adopted to Section 67 of GST law. Panchnama we have discussed. This Section 67, last section, purchase and return of goods. I was giving an example of anti-evasion. Now, this particular provision, this anti-evasion team comes into picture, where commissioner or an officer authorized by commissioner, they can cause purchase of goods or services. Means what happens? The government servant will go as a, what I can say, as a buyer. They walk into any shop, they go to any particular company for the purpose of getting the goods or getting the services. For what? To examine whether the seller is issuing a tax invoice, whether the seller is giving a bill of supply. And when the goods are written back, whether they're getting a refund back promptly from the seller. To do this particular activity, before a search and seizure happens, Section 67, subsection 12 gives the authority to commissioner or an officer empowered by such commissioner to buy the goods and to return back those goods. So this is connected with my search and seizure. Based on the experience, they go for inspection further. Moving on further, inspection. This section 68, which is connected with e-way bill, we've already discussed that any conveyance which is transporting goods should carry certain documents, a tax invoice, bill of supply, and e-way bill in relation to movement of such goods. So this is discussed at length under section 138. Next, power to arrest. Now, this is a mechanism which was adopted from CPC provisions. I pray for God, none of you should experience the provisions of section 132. I would say it's like a black day. A serious offenses which are called as a cognizable offenses. Under the legal terminology, there is something called cognizable, non-cognizable. Cognizable offense, which is a non-bailable offense. Make a note in your working note. Cognizable offense hyphen non-bailable warrant. Now, what does that mean? A police officer can arrest a registered person. A police officer can arrest a taxable person wherever there is a cognizable offense. Now, this power to arrest has been given under this section 132, invoked from the CPC provisions wherever there is a cognizable offense. I have listed down those cognizable offense. They have also given the monetary limits. Examination students, in the entire discussion, this is one slide where you can expect. Mr. A, who happens to be a director of a private limited company, has been served with a notice by the GST officer, and he has been arrested for an offense conducted under section 132. The amount of offense has been quantified as, say, 350 lakhs. Examine the provisions of GST law. So, in relation to arrest, when a person can be arrested, what offenses arrest will happen, we need to understand. So, this commissioner alone has a power to give instructions. Assistant commissioner, DC, JC, none of them have a power. Commissioner has a reasons to believe that a person, this person could be a taxable person, could be a registered person, or a person who has helped these two people, transporter, owner of a warehouse, or any other person who has helped the main person for that particular offense. Under section 132, where that person supplies goods without issue of an invoice in violation of the act. So first offense is violation by way of a supply without issuing an invoice. Issues an invoice or a bill without actual supply of goods or services. First offense, he supplied goods, he supplied services, but there is no invoice. Second offense, he gave a bill trading. Actually, there was no supply of goods or services. Both of these are punishable offenses. Two categories. Then third category, the person avails input tax credit. Bill trading. I received a bill where I have availed input tax credit in relation to above two transactions. Third, collects an amount as a tax but fails to pay to the government beyond a period of 3 months. Now, please inform all your clients, money which was collected as tax but not paid beyond a period of 3 months, based on the threshold limit I'm going to talk, it is a punishable offense. Arrest provisions can be invoked. So as of now, 4 provisions we have discussed. One, Supply of goods without a tax invoice, supply of issuance of invoice without actual supply, availment of input tax credit in any of these two categories. Fourth, collection tax was collected, but beyond 3 months that was not paid to the government. Now, point number 1. These offenses are punishable where my tax evaded quantified is exceeding 500 lakh rupees, that is 5 crore. Any of those offenses which were quantified where the amount of tax, the amount of input tax which was quantified is exceeding 5 crores, my punishment, that is power to arrest, may extend up to 5 years with a fine. So arrest can happen where the assessee will be imprisoned for a period of 5 years. 5 crores, 5 years, up to, this is up to 5 years, along with the fine. So what if the amount of quantification exceeds 250 lakh, 200 lakh rupees, but does not exceed 500 lakh rupees? So if it is above 2 crore, but less than 5 crore, an imprisonment which may extend up to 3 years. 5 years for an amount involving above 500 lakhs, above 200 lakhs, but less than 5 crore, the imprisonment is for 3 years. So sending to jail 5 years, sending to jail 3 years. Now, so what if we have caught hold of a person, we have put him to the jail. That fellow came back, he did the offense once again, above 200 lakhs or above 5 crore. This person, once he was convicted for an offense, he came out, he did the same offense once again. Now again, they say he can put for that offense, whatever offense was noted, subsequent offense, he can be put into imprisonment, which may extend up to 5 years again with the fine. So like Sri Krishna Janmasthala, if that fellow is fond of going back to jail every now and then, you catch hold of him, put back to jail once again. This is what is discussed in your arrest provisions. And as per the law, whenever there is an arrest which happens, this person who has been arrested on a cognizable offense which is non-bailable, he should be put before the magistrate within a period of 24 hours. Most of the time, we see this assessment where arrest related provisions happens. The investigation, the officer comes on a Friday, the search and seizure goes on exactly Friday evening or Friday night, they invoke the provisions of arrest, section 69, knowing that Saturday is a public holiday, Sunday again a public holiday, only on Monday this court will be open for producing before a magistrate. Willful tactics of the officer concerned. Do we have any recourse? There is no recourse. So once they have arrested a particular person, within 24 hours, they have to produce before magistrate. And if there is a continuous public holidays, no choice, that person has to be there in the custody of the particular proper officer for further investigation. They they also know this CPC provisions. The officers are trained how to tackle with the offender, how to catch hold of him, how to get the facts. You would have watched a couple of movies where they ensure that the people does not sleep in the night. When the people does not sleep continuously beyond 18 hours, imagine the way the person gets tensed with this torture. Let's see, it is not fault of the government officer. They want to get this offense. They want to know a list of all the people who have been party to that particular offense. Production of a person before magistrate, like they adopt the provisions of CPC. Once it is a cognizable offense, though advocates comes with a bail, it is non-bailable offense. They have to go and produce before the magistrate with all the evidences, and they seek for taking him into custody for further investigation. Next, summons. Section 70. Most of you would have heard this term called summons. Unhealthy and not a good sign to get a summons. Reason, whenever there is a offense which is connected, or whenever there is a news that there is a evidence to believe that one of the parties also prey to this particular offense, the officer concerned can invoke the provisions of Section 70. My Section 70 is adopted from the principles of CPC. If you remember, in the movies, there is a quote in front of the judge. The particular person who comes for presenting before the judge, they take an oath on Bhagavad Gita, Quran, or Bible. They say, in the name of Lord, I speak only truth. I produce only the information which is to the best of my knowledge to be a valuable information. So wherever the government officers believe that they need to have some evidence, they need to collect some information in relation to any investigation, they can summon a person, and they adopt the provisions of this CPC judicial proceedings. Whenever a shoka, summons, there is a circular given by the department. Generally, the proper officer cannot give a summons on the managing director, cannot give on the operational director. Means summons cannot be used as an instrument to showcase the authority of a proper officer. I'll give a live recent case which happened with the directors of Swiggy. Unfortunate incident. It happened in Bangalore. In the case of Swiggy, there are 3 operational directors. The anti-evasion department, they have been doing the audit with respect to input tax, some fake invoicing, some invoices which are issued from one entity to another entity. In the process of this audit, they got to know that one invoice was issued to Swiggy, where Swiggy has taken an input tax credit. For doing that investigation, they have summoned the directors. The department circular clearly says that you summon the officer in charge connected with the tax matters. In a company, finance manager, finance director, or accounts manager, these are the people who have a knowledge of the operations. You can call the operational director. Why? To get some key information. But it doesn't mean that you exercise your authority just to showcase your talent, just to showcase your supremacy in front of the management. Don't cause undue hardship to the management. So in the case of Swiggy, it so happened that one invoice, they felt that there is some fraudulent activity which was not established. They have called these directors. They were made to stay beyond 12 o'clock in the midnight. 11 o'clock one director came, 3 o'clock one director came, evening 5 o'clock one director came. All the 3 people have come. They were not asked, they were not questioned. After 6 p.m., slowly they have locked all the main doors and they started investigation. Beyond 12, they were asked. At morning 4 o'clock, they said, look, there was one transaction where you have paid you have taken an input tax credit. This supplier happens to be a defaulter. We feel that you have done something wrong. You pay that particular, you admit that this is an offense and you pay that particular money. Early morning 4 o'clock, they felt that this is atrocious thing. 11 o'clock, 11 a.m. they have come. Till next day morning 4 a.m. investigation was happening. Out of that pressure, they have admitted to pay that tax. Later, this management have taken very seriously on the department. They filed a writ petition in the High Court saying that, look, I have been paying thousands of lakhs, and this bill is just a tip in the ocean. I have no culpable offense. I have not committed an offense just to evade payment of tax. And they have substantiated. They paid hundreds of lakhs of rupees as tax. And when you compare that transaction, it is very trivial. Then the Honorable High Court of Karnataka have said that, look, don't exercise this power of summons just to call the management and do an investigation. You use this power of summons just to call for information which you feel it is required for you to do further investigation, but don't undue exercise that particular power. Finally, we have this provision called access to the business premises. Any person, again, like section 67, joint commissioner. Similarly, any person who wants to visit your business premises, joint commissioner will authorize that particular proper officer to come for verification of documents to verify your information. And whatever documents he wants, he will take back for the purpose of audit per se. This is a provision which is connected with your access to business premises. And based on that information, he can call for a special audit on the basis of section 66. Now, these are all information which he can call whenever there is a access to the business premises. And support to proper officer, as I said, CPC provisions, whenever the proper officer goes for investigation, etc., they can take the help of railway police, normal customs, etc. All these other local government officers, they have their duty bound to support the GST officer. Students, we are at 9 o'clock. With this, we come to the end of today's discussion on audit and assessment provisions. Tomorrow, we have another beautiful discussion on demand and recovery. So we will see you all in tomorrow's session. Till then, good night, goodbye.